Welcome to Inside the Deal. I'm Suzanne Stevens. With me today is Shad Azimi. Shad is a founder and managing partner of Vanterra Capital. Shad, I know that Vanterra invests in other private equity firms to then co-invest with them. Because we're not seeing a lot of deal activity from private equity, how's that affecting your investment strategy?
Yeah, so what we do is we form strategic partnerships with lower middle market private equity funds, and I think what we're seeing now is that there isn't a lot of deal activity right now, and what you're going to see is private equity funds reaching the investment term limit of their mandate, which in some cases they'll probably try to get extensions. Where in the past couple of years, funds were investing their committed capital within 2-3 years, and I think you'll be closer to the 5-year time frame. Exactly.
So a bigger question, I think, is when will private equity firms start investing? When will that money that's been building up start flowing out into actual investments? What's your best guess? Yeah,
I think what you're seeing is a massive dislocation between the bargain buyers, which are out there, ourselves included, and the sellers' expectations. And until those cross paths, there won't be a lot of deal activity. Global private equity activity in 2008 was down 72% from the prior year. That's a huge drop-off in activity. And I think as you start seeing more of distressed buyers, because I think there's a lot of people who own portfolios now that realize, or companies that need capital, they realize that they need it, but they're not willing to do it at the valuations that the bargain buyers are looking to buy at. Over time, they're going to realize they're going to have to do a deal, and I think that could happen in the next 1 to 2 years.
Are you seeing the objective of some private equity groups with the investment? Whereas it used to be cost synergies or turnaround, and then get out. Mm-hmm. Are you seeing more strategic investments? Along with that longer-term horizon, looking at staying with a company longer and really focusing on the management and operation of the business over the long term?
Absolutely. I think what a lot of limited partners used to look at when they evaluated managers was, what were the returns, right? I think what a lot of LPs fail to do is look at how those returns were derived. And there's really 3 ways to derive value in private equity. That's leverage, all right, and then deleveraging process. There's multiple arbitrage, which is buy low and sell high. And then the third thing is organic operational improvements, right? And I think you need to we focus on investing and partnering with managers that create value through the operational improvements, and that takes a lot more time. So the process of using a lot of leverage and flipping a company and recapping to yourself, I think those days are gone, and they should be. Where value is created is from really the operational improvements, which is where we like to focus.
Shad Azimi with Vanterra Capital, thanks for coming in.
Sure.
I'm Suzanne Stevens. Thanks for watching Inside the Deal.